Good morning, traders, and happy Monday, happy Easter to those who observe. It is Monday, the 10th of April, 2023. A quick mic check, please. This is episode number 2445. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the pre-market summary sheet from Convergent Trading, we find that overall the market has a mixed to slightly risk-off sentiment. We were actually holding steady till about 6 o'clock Chicago time, 7 o'clock Eastern, when the market just turned down and put in a pretty decent-sized impulsive move, dropping about 25 points on reasonable volume given the day. A really important reminder that Europe observes Easter today as well, and the European markets are closed. So the portion of the sheet here that shows the European markets, this is on holiday, it's not updating. And so we expect the volumes to be light given that quite a bit of movement. Other than the RTH session in the US, the next most active period for the futures markets, especially the indices, is when Europe opens, which is at 2 a.m. Central, 3 a.m. Eastern, and that didn't happen today. So we're missing about 50,000 contracts or so, 50 to 80,000 contracts from what we would normally do by this time of day had Europe been open. So what are the key pieces here? The Friday jobs report had an effect where it relieved some hard landing pressure. It was a pretty good report. The market ended up spiking up, pushing down, then rallying before it closed because the indices were only open for about 45 minutes after that number had come out. And what we've done so far is we have taken back, we have gone back to where we were before the jobs report on Friday, and we are actually below it now. Not sure what the driver is, but coincidentally, the only thing I could find, there was some chatter on the news feed. I didn't really listen, and then I saw it move. But the only thing I could find is the World Bank has set expectations for the GDP, global GDP growth, way down at 1.2% versus 2.1% for last year. If anybody knows anything different, let us know. Other than that, we have a pretty busy week this week. We have CPI on Wednesday, US CPI on Wednesday. That's really going to reveal what is likely to happen with these interest rates. It looks like the market is a little bit ahead of itself, maybe, in terms of what the Fed will do and whether or not we are pausing on quantitative tightening and interest rate increases. But the US CPI report on Wednesday will help us see a cleaner picture, so the market is likely to gyrate until then. Then we get PPI on Thursday, which is not, this is the producer price index, which is not likely to do much, and that's about it. Today we have Feds Williams. It's pretty clean slate today for the calendar. We very likely aren't going to do much today as a result of scheduled events. There's just nothing significant today. Later in the evening, though, or in the afternoon, we get Feds Williams just 15 minutes after the close. And then we get this evening, we get, if you're trading during the evening hours in the U.S., we get the Australian Westpac Consumer Confidence number. That's a major number for Australia. Interest rate decision out of South Korea. And then we get the NAB business confidence number out of Australia. And then most importantly, the China inflation rate number at 9:30 this evening. Turning our attention to the S&P. The S&P was balanced. Now it's a multi-distribution profile. This is, let's adjust that here. It's a multi-distribution profile today, and it really has, we ended up with a double distribution on Friday. We ended up trading on Friday between 4,100, really 40.90, not Friday, Thursday, 40.96.50 to 41.14. So for those of you who are convergent, I warned on Thursday to keep an eye on that 14 area. On Friday as well, before the number, I expected 14 would likely be support for the number. And then what we did is we busted out, and then we ran to 31 in the S&P, pulled back to 24.25, and created two separate distributions with a thin portion in between. And what we've done this morning is we have traded all the way down into that lower distribution. So we went back to where we had been all of Friday morning. We've kind of reset the clock a little bit. And that's what we've done. We've done so on 127,000 contracts this morning. Again, very, very light because of the European markets being closed. Inventory is 42% short at this point, and the range is 36.75 points, which, by the way, is much wider, about twice as wide as what we've seen recently. So I'm expecting that the market's likely to respond to this push lower, this strong push lower. That push occurred from the mid of the session on the S&P. Let's look at a chart, stop talking theory. So here we are. So we pulled, we open up, we push higher, we push through where we ended up on with the number on Friday. The number on Friday really gave us a weak high against Thursday's high. We ended up poking through that. We could not find, looking at the prints up here, couldn't find any real interest, any real push by buyers. Comes back in, consolidates, and then tests the other side of Friday's low. So we tested both. This is why I see that it's a little bit off, because the S&P didn't go that high. All right. So the NASDAQ was what I was looking at next and what I had noted down, and I'm talking NASDAQ while discussing S&P. So Friday opens up, and then it goes off. This is what I was talking about. It goes off right off of the mid. So it pulls back. So Friday pushes, could not. The NASDAQ ended up pushing higher. The NASDAQ's been stronger. I'm mixing products because I'm looking more and more at the NASDAQ now, and I'm kind of mixing different products. But the ES couldn't push back up, and it pulled back, and then it pulls into the mid of the session, the full session mid at this point, and then from there it explodes to the downside with some pretty heavy trading at the low. There's some support here looking at the order flow. So if we look at, again, the S&P order flow, look at how it's behaving. Now, you're seeing that it's making pretty good price progress right here with some pretty big bubbles. These bubbles, the dots that you see there, represent 50 lots or better hitting the bid. But there's pretty good price progression on this push down. And then from the inside bar, it continues lower, which is what's expected. But here we did find some support, believe it or not, when you have bubbles happening and yet the footprint is kind of fat, like you're seeing here, 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 not so much. This is support. In order for those bubbles to happen, those dots to happen that you see there, in order for that to happen, there had to be bids absorbing those market orders hitting the bid. And so it's trying to find support in this area near the low, but it is a weak low at this point. It is not moving away. Had it been pretty good support, in other words, we move down, 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 we hammer on the bid, and then We hammer on the bid, and then if there are real bids down there and aggressive buyers, they will chase them back up. And so you end up with a fat profile, maybe a second fat profile, and then immediately it would move away. In other words, we would move away from the low that we see here as opposed to lingering. Because it's lingering here, this auction is not likely to be done. I'm expecting that it is very likely to start squeezing down into the 4100 century figure. Remember, the low on Friday was 96.50, which was below the prior day's low. So the low of, not Friday, Thursday, the low of Thursday was below Wednesday's low. So the one-time framing used to be up. In other words, the trend used to be up with higher lows. That was breached on Thursday. It made it neutral, and then today it is likely to retest that 96.50 area. It looks like it's a news move, so there's a caveat. There's always a caveat to news moves in that news can be refuted. You can get a press release that opposes what was released by journalists and things like that, and it might end up pushing all the way back up. And the SOC for this is really the 4135 area is where this thing kind of started. So I seriously doubt that we would make it back up there given the condition of the market, the fact that we have trended down. If you look at the relative delta here, you could see that from the morning, as soon as we got below VWAP, we've kind of hung out below VWAP, and the overall trend for delta is down. Remember, this is the cumulative delta. The orange is small lots. This is using MBO data, not data that's all combobulated together. This is using MBO data, so it's able to see who participated at what level, and it separates the small, large, and very large, and the partitions in the ES is small is 1 lot to 9 lot. Excuse me. 1 lot to 9 lot. Large is 10 lot to 99 lot, and then very large is 100 lots plus. 100 lots plus. A little bit of activity here on this drop pretty late, but most of this was carried down by small lots. This makes it suspect. This move is suspect for me, because if this was really meaningful, in other words, the higher time frames in play, those guys don't execute with 9 lots, which is the limit for the small lots. In other words, the cumulative delta is tracking with the small lots here. This makes this move suspect. Okay, these are small players, small orders going off, and are controlling the auction, and we have an impulse down. So to me, I'm just going to sit back and see if we get some responsive buying. So the key trade of the day, or the key plan for today, is really to just sit back. Remember, it's a semi-holiday trade today. The markets are likely to continue to have very low volume, relative volume, but I'm looking for this thing to be responsive this morning. I'm looking for these small lots to be rebalanced back up. That's what I'm looking for on the open. I'm looking for these things to kind of cover a little bit. And if they don't, then we're pushing up against a key level, the 4100 major strike price, and then 96.50 below there. But like I'm saying, it's not really. I don't see this move down as very substantial in terms of participation and price. Yes, it's a 30-point move or whatever, but in terms of participation, it's pretty poor participation this morning if you read the order flow. So here's where we are today. This is Thursday. We did not have a Friday RTH session. This is an RTH only chart. So you can see the double distribution, and this is that line in the 4013 area from Friday, 4014, really, 4114. We've breached that, and we're hanging out in this lower distribution. So what we've done is we balanced out to the downside on Wednesday, okay? And then on Thursday, we opened in balance. Remember, we expected that. We expected to open in balance, test down, consolidate, hold steady, and it ended up breaking higher, creating an upper distribution, moving the point of control to the upper distribution on Thursday afternoon. But what we see now is that the market is refuting that upper distribution and is opening and hanging out in the lower distribution, which is where Thursday started and where all of Wednesday took place. To me, this looks like it's likely to be an open auction in range. I expect it to participate to the upside. I expect it to try to breach that 14 area and go into the single prints. These are single prints right here. I expect it to push through the 14, go into the single prints, and that's what I have to wait for this morning. I'm sitting on my hands to see what it does there. If it's not able to breach the 14 and go into the single prints and it turns back around and goes through the open, I'm a seller today, and I'm going to start looking for it to test the next low down, which is 40.88. So I expect it to take out the 96.50, head to 88, come back into balance with last Monday, or no, the Thursday before last week or so, because we've already tested this Friday run, this big rally day. 2 Fridays ago, it already tested this. It made a rounded top here, it rolled over. We talked about this last week. And if it's not able to find buyers above the 14, if it kind of reaches its hand up there and doesn't find buyers stepping in and buying them up, it's got full permission now, or full confidence for sellers to step back in and take it right back down to 40.80 or so. Test the 96.50, the 88.50, and get us back into the 40.80 and bring us back into balance down here last week. Below here, the structure is pretty weak, and it opens up a push to the point of control down below at the 40.26. This is 26 right down here. So if we don't hold here today and we ended up running through, then expect 40.26. So if this happens, again, if the market pushes up, gets into the single prints from last Thursday, is not able to find motivated buyers to take us all the way up to the upper distribution, through the 27 and into settlement, this is a pretty high confidence short scenario where we're looking for it now to breach, because we have statistical ranges on a daily basis that we're likely to get. And if we don't get them to the upside and we roll over, we're likely to get them to the downside. And that brings us right back into the 40.80 range. Okay, I know that's a lot that I'm covering here, but that's what the profile kind of situation looks like. This is what we're looking at right now. So for this morning, it's really about seeing what it does. Remember, this is a weak low now. Seeing if it gets any responsive buyers to squeeze some of these small lot shorts out. I expect it to rebalance a little bit. I expect that there's likely to be a push to kind of rebalance. That push comes from small lots taking profits. They're buyers when they take profits, and then potentially consolidate and then break through and push to the downside. That's the main idea. Anyway, I won't get too far into it. Looking at crude, just want to talk a little bit about crude. Crude has tried and tried the upside, and it's unable. I would expect this to act like a flag that continues, but it has been unable to continue. Crude is in a very, very tight coil here. Anything below 79.50 is likely to start to fill in the gap here, and I'm looking for it to move back to the 77, which is a very important, highly accepted area in crude. 77 will be the target from 79.50. The NASDAQ, looking at the NASDAQ, same picture here. The NASDAQ, again, relatively stronger, opening in a lower distribution, basically in line with Wednesday's balance. And then the NASDAQ, if it starts to move lower, it's likely to aim for the gap below, so it's likely to get below 12,855. But we'll see. The NASDAQ's a little bit harder to read currently. It's a little more noisy than the S&P is. Okay, I'll leave you with that. Don't forget to hit the like button. And if you're not a subscriber to the channel, please subscribe. Again, hit the like button. Appreciate you listening. And of course, your comments are welcome. Take care.